And it's time for the business news now with Nicholas Poynton. So, Nicholas, this ride-sharing company, Ola, so this is kind of like Uber, aren't they? They're eyeing up the corporate market. And what plan do they have?
So, we're talking about Ola here. They're an Indian-based company and they came to New Zealand about 2 years ago, and they're looking to try and compete. They came into the market looking to trying to compete with Uber. And what they're trying to do, what they've announced, is that they're planning to secure deals with government agencies and big businesses as a way to sort of keep the cash coming in. And the business travel industry, it's a really lucrative one, and it's been dominated by your traditional taxi companies in the past. But Ola reckons that they can sort of, muscle their way in there and take a slice of the market for themselves. So what they reckon they'll be able to do is offer fares for less to companies. And as they do for your regular Joe Blogs, who's just, trying to call a taxi or call a ride. And they say it would also be pretty good for drivers, as they can accept individual or corporate jobs for the same price. There won't be any opportunity costs. So for the driver, there's no difference really. And interestingly though, Ola says that they're not trying to poach the existing contracts that firms already have in place. To do so would be quite expensive because a company locks into one of these deals with a taxi company, and the deal has to run its course before another company come in. So what Ola is trying to do, what they say they're going to do, is that they want to operate alongside the existing deals that these companies already have in place. So they want to give businesses the option. They're saying, look, you can have your current contract you have with your normal taxi company, but why not consider us as well? So for your employee, they fly up to Auckland for a business trip. They're sitting there at the airport waiting for a taxi to arrive. They can decide, oh, you know what, I can call an Ola, take 2 minutes to get there. So they're saying they're not looking to poach customers, but it's sort of poaching by stealth. And the taxi companies, RNZ spoke to the Taxi Federation today, and they say they're used to ride-sharing companies and they're used to competing with these ride-sharing companies, and this new strategy is going to make zero difference to what they're used to.
Interesting.
So pretty defiant there from the Taxi Federation.
Okay, let's move on to some areas of the economy that are doing well. So dairy, meat, horticultural exports, they've gone, massively upwards during the pandemic. How much are we talking about?
Yeah, we're talking quite the increase here. Sales for the year to date are up nearly $1 billion compared with the same period last year. So the New Zealand Institute of Economic Research, they put out a report today, and they say this has been driven by a couple of things. One's really strong demand from the Chinese market. The other is there's a lot of global trust in the New Zealand food safety. And we also have flexible and quite diverse supply chains. We offer a lot of different products for other countries depending on what they want. But those first two things, the Chinese demand and our food safety, those things combined have been quite strong. Yesterday I was actually talking to someone who worked in the Chinese meat industry for 20 years. And what he was telling me was that meat products in China have come under increasing scrutiny since the outbreak, as it was linked to that meat market in Wuhan. And there's also been that subsequent outbreak that we saw in Beijing about a couple months ago. So you combine this heightened anxiety with the trust in New Zealand's food processing standards, we can begin to understand why we've seen this increase. But whether this trend continues sort of remains to be seen, because surprisingly, or maybe not really that surprising when you actually begin to think about it, but a lot of the current strength we've seen in our exports kind of depends on how the US is handling the outbreak, the COVID-19 outbreak there. New Zealand Institute of Economic Research, what they're saying is US consumption of retail products, if they drop, it could have a domino effect. So because that could mean that Chinese exports would fall, and that means they're getting less money for their products, which may mean they'd have less money to spend on our products.
Right.
So, sort of as always with business at the moment,
it's the export go-around.
Yeah, we'll just wait and see.
Okay, what was going on the markets today, Nicholas?
Yeah, so today the NZX Top 50 closed up over 1.5% by 184 points to 11,737. The ASX 200 also made significant gains, up 2.5%. The New Zealand dollar is down to 65.6 US cents, down 1/3% to 93.4 Australian, and down slightly to 51.8 British pence. And that growth we saw in the markets today could be explained by European leaders agreeing to a €750 billion stimulus package to sort of jointly fund their recoveries.
Okay, thanks, Nicholas. That's Nicholas Poynton with our Business Wrap.